Some key housing data coming out in just the past hour. Case-Shiller home price index showing a gain for the month of January. That is month on month. But some are saying, though, that there's some mixed figures within that. Robert Shiller is the co-creator of the S&P Case-Shiller home price index and also a professor of economics at Yale University. He joins me here in New York, right next to me. Professor, great to see you in person, in fact. Okay, so with this data that we got for the month of January, and when I say mixed, partly it's because some are seeing that as big of a recovery in some of the cities as you might expect, right? What is going on there?
Well, we had a really sharp recovery starting a year ago, and it's still going up on a seasonally adjusted basis, but it's gotten weaker, and so it's kind of iffy right now, the outlook.
And the reasons for the weakness?
Well, I suspect, it's a speculative market, so it's not just reacting to immediate, it's reacting to the outlook. And the big cloud on the horizon is the withdrawal of government support for the housing market. Mm-hmm. And I think people are, in many places, getting a little worried about that. And so they're hesitating to buy, and that's what weakens the...
Right, because that has been keeping rates down. And in fact, we're starting to see mortgage rates go back up again, particularly on the 30-year. That's just a sign, perhaps, for some people that this is, a sign of worse things to come?
Well, there is a real concern about a possible double dip in the housing market and a double dip in the economy. We had a recession. We appear to have emerged from it. Usually that implies clear sailing ahead, but this time is different.
Yeah. Well, once the Fed pulls out, which is, of course, tomorrow, are we going to see an immediate impact, though, on interest rates or an immediate impact on the housing market?
Well, not an immediate impact because it's not news. We already knew that they were pulling out. And markets are going to be sensitive to new nuances. Now, the president just last week announced a new program to promote workouts.
Right.
I think.
You mean loan modifications, right?
That's right. Yeah.
Right.
And I think that perhaps one reason this was announced now is because other government support is being withdrawn, and the psychology of the market depends on people's perceptions that the government is going to be in there. And so it's good that we have a new program that gives people a sense of hope.
Or a new or a larger program, really, because loan modifications have been going on for some time.
This
is just big, right, disappointingly, as you point out. Just one last thing on this, though. Is there going to be enough private demand to replace the Fed?
That is the big question, and it depends on animal spirits. It depends on what people think. That's the strange thing about a modern economy. Everyone is looking around and trying to judge whether it's the right time to buy, and if everyone's looking at each other to try and sense the psychology. And right now we're at a very uncertain point, I think.
Just real quickly, where do you place the bet on whether or not we're going to see a double dip in the housing market?
What's the probability of a double dip? I don't know, 50-50, which is actually very high because we don't have double dips. The only real post-war example is the 81-82 recession. There's no other example.
Okay. All right. Thank you so much for joining us. Really great to have you here. That was Robert Shiller, the co-creator of the S&P Case-Shiller home price index.